Hello traders and welcome to another video review. Today is Thursday, February 8th, 2024. Let's find out what's going on the economic calendar today. Let's just switch to the very important data. So I'm going to mark this high settings, so high impact events. Let's see if there are any for the high impact events. As you can see, there isn't any. I guess there isn't any. There is one. Initial jobless claims are scheduled for release at 2:30. Maybe there are some medium important data releases as well with the medium impact on the Forex markets. Let's the website just sort it out for us. There you go. So what we have here: adjusted current account and current account from the Japan. This data were published overnight together with the RIX house price balance, which was better than expected, minus 18% instead of minus 22. Building approvals from Australia in line with the expectations, minus 9.5%. And Chinese data, Chinese CPI and Chinese PPI data, both of them were a little bit different than expected. CPI lower, 0.3% versus 0.4%. PPI lower as well, minus 2.5% versus minus 2.6%. So what else do we have? Today we got the ECB economic bulletin scheduled for release at 10 o'clock. We got data from the US initial jobless claims 2:30. ECB Elderson will give a speech 3:15. Then we have the Bank of England MPC member Mann to give a speech at 4 o'clock together with ECB Lane that will give a speech at 4:30. Then at the end of the day we got the report from the WACDE report from the USA at 6 o'clock. At 7 o'clock Atlanta Fed GDP now, and then at 10:30 we got the Fed's balance sheet to be released. So pretty intense day, plenty of the events that were released overnight during the Asian session. Nevertheless, we still have this key event of today, initial jobless claims from the US. All right, let's just switch to the charts now, and we are going to start with the Bitcoin because of the recent developments. So we start from the cryptocurrencies. Why? Because we got this movement to the upside from this a triangle pattern. So if you can see it, right, this after the big bullish engulfing, we've been moving to the level of 43,875. That might be the wave A. Then we have the consolidation, wave B, in terms of the Elliott wave, or in terms of the technical traders, this is as simply triangle pattern, symmetric triangle pattern, A, B, C, D, E. Okay, the wave B is done here, and now we are waiting for the wave C to unfold. Now we broke above the level of 43,865, and we broke above the level of 44,786. So those targets, those levels are now technical support. There you go. And even the last one is the intraday technical support. Now let me just place the ABC pattern, okay, from the bottom. So we got the wave A, we got the wave B completed here. Now we are going to unfold the wave C. Now let's just find the targets for the wave C. Okay, let's just find the targets for the wave C. We are going to use the Fibonacci tool, and this is the trend-based Fibonacci tool. So again, we got this movement of the wave A measured from the lows of the wave B, so we can see straight on that 100% of the wave C measured from the wave B is located at 47,569. 61% is located at basically at the technical resistance 45,574, and the 38%, the minimum, has been hit already. All right, so we still have these targets for the wave C. Most likely we will go somewhere around this level, and the outlook for the Bitcoin remains bullish. Please be aware of the fact that the market conditions are very positive, the momentum is strong, the momentum is positive, but the market conditions are extremely overbought. on a 4-hour chart. So some sort of the pullback is now welcome, maybe, or some of this intraday support levels will be tested, and then the market should regain the momentum to the upside. So this is the Bitcoin. Let's just take a look at the euro dollar. So the euro dollar at the 4-hour chart, let me just switch a little bit closer. Not much is going on here on the euro dollar, because the market is still struggling with the technical resistance 1.0781. Local high was made at let me just move it here, 1.0789, but there is still no basically like a big close above this level, but this zone is still under the bearish pressure. So the bears will try to make sure that this price will move lower towards 1.0768 or the moving average 1.0758, or even back towards the zone, the demand zone. Momentum is roughly negative. Well, let's say it's neutral. The bulls tried to break above the level of 50. It made it to the 52.42, and now we are reversing lower. So if the momentum stays below the level of 50, the overall outlook remains bearish, with the potential of moving even lower below the last swing low at 1.0724. So that's the euro dollar. Because of the Japanese data, let's take a look at the US dollar to the Japanese yen, and as you can see, we are again approaching this key level here, 148.8384, as we are challenging this level again. So momentum is strong, it's positive, 65 points, and we might see a breakout to the upside. So please mark this level in your charts, because as you can see, that level has been tested plenty of times, and any breakout might be very strong and might result in another extension to the upside. So where is the next target for the US dollar to the Japanese yen? Basically, this target is located roughly around 149.76. Then there is a target at 150.07, and even the highs from the middle of the November 2023 located at 151.92 are still taken into the account for this potential breakout. So the market is above 150 periods moving average. Momentum is strong. There is just the level of the technical resistance, and we might see a very nice movement to the upside. So please stay focused, stay vigilant on the US dollar to the Japanese yen. Recently we got the data from the Canada, so let's just take a look at the Canadian dollar, what this guy is doing here, what this market is doing here. Well, as you can see, we got this very strong movement to the downside here right now. After this movement to the downside was done, the market retraced. How much did we retrace? Basically, let me just place my tool roughly around here, and then the other will be swing low, and this swing low will be roughly here. Okay, so the point is, let me just move it a little bit lower. The point is that we retraced 50%. Basically, as you can see, that was the key level that the market retraced. Yeah, 50% of the Fibonacci retracement. So this is the Fibonacci retracement tested many times, 1, 2, 3, 4 times, and then we got the reversal. So it's a key level here. There is no doubt that this is the key level, and without a breakout below this level, we cannot say that the uptrend will resume. So it looks like we got this movement to the downside as a directional movement, impulsive movement to the downside as the trend. That was just the correction. We should expect another movement to the downside to be made soon. So let me just zoom in a little bit closer, so high 1.3540. That's the technical resistance level, and the 50% Fibonacci retracement level. Very strong level, too strong for the bulls. Market is going down because of the extremely oversold market conditions around this level. So now we are cooling off, and if we apply the 50 points line on the RSI, we can clearly see the market is below the 50 points line, which means that the momentum is negative, sentiment is negative, and the bears are in charge of this market. Where is the next target for the bears then? Well, we can apply our technical support. This level 1.3463 is now violated, so it will act as the technical resistance, and it break out below the 1.3449, which is the 100 periods moving average, would open straight on the movement towards 1.3357 and eventually 1.5342, and eventually we got one more low a little bit higher, 1.5365. Very strong zone, demand zone for the bulls. So if there is no reaction in this zone and we break below this zone, we might even test the swing low at 1.3177 soon. So the outlook for the US dollar to the Canadian dollar doesn't look that well whatsoever. And last but not least, let's take a look at the crude oil because of the yesterday's data. So the crude oil, as you can see, we analyzed this market yesterday. Let me just zoom in. The market is moving exactly as our scenario indicated, just exactly as we anticipated. We are moving inside of this zone here, the supply zone located between 73.76 and 74.49. Sorry, the market is still located. The price is still located between the 150 periods moving average. Bulls are trying to break into the positive territory, but it looks like if there is no strong valid breakout and sustained breakout above 74.50, the market might be pushed lower, especially that there is some sort of the, let's say, a local trend line might be applied here. You can see it right now. So let's just make it orange. There you go. Okay, the orange one is here already. Oh, so that will be purple. So if we break below the short-term technical support, which is purple, then of course we might see some sort of the very sudden reversal and downtrend continuation on the crude oil. If we break below the lows of the February 5th, 71.41, the next technical support is located a little bit lower, $71, 70.50 and 70.18 dollars. So please stay focused, stay vigilant, because it looks like the movement here looks like the rising wedge, to be honest with you, and it looks very very corrective to me. So we might see the movement to the downside very soon, because it still looks something like this. Yeah, so if this rising wedge is basically broken, very sudden, very dynamic spike down might occur on the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.